Welcome to Stock Talk with Nico Kritikos. Today we're going to be going through Corsair Gaming's Q4 earnings for 2021, and we're also going to be going through their guidance for the next year as well as all the way to 2026. And I'm going to show you kind of running the numbers of where I see this company going over the next 5 years as far as revenue, net income, and the market cap. So to start off, we have 2021, they did $1.9 billion of revenue when about the same number was expected, which represents 12% year-over-year growth. And if we want to look at what this stock has been doing lately, we can see it's absolutely been getting killed. I own a lot of shares of this, and I bought way too early at $28 a share, and now the stock is down to $20. So if we see, so expectations were very low for this company. They had them revenue going down pretty big, and same with net income. Revenue mostly because of 2020 was the pandemic year, and that was when a lot of people were, staying home, playing games, and people building PCs bought a bunch of parts, and that skyrocketed revenue. Then you had the fact that this past year, 2021, we saw lots of supply chain issues, lots of commodity prices going up, and the the chip shortage happening as well. So that was going to hurt profitability. So those were the two negative factors that were impacting this business in 2021. And so that's why expectations were very low for this company. So if we look at EPS for 2021, they did $1.45 when it was $1.35 expected. This was about flat year over year. And then we had net income at about $101 million for 2021. And this was slightly negative as net income was a little bit higher in 2020. Now, if we go to just their Q4 numbers for this past quarter, net revenue came in at $510 million when $495 million was expected. So that was a nice beat there. And then net income was $25 million, which was actually down pretty big compared to the last quarter of 2020. Once again, this was because of the chip shortage and supply chain issues. People aren't really ordering PC parts as much, and because things are so expensive. So that's why. Then EPS of 35 cents when 25 cents was expected. Also a pretty nice beat right there. The stock was down 11%. Right when earnings came out, the stock went down 11% at one point, and then now it's only down 2%. But I would think the stock would be up tomorrow because the earnings are pretty good. And wait till you see what they have for guidance coming out. I mean, the stock it's been beaten down so much, and the valuation so low. It's trading under $2 billion right now, and they're about to do $2 billion of revenue in 1 year. That's incredibly cheap. So if we keep going, we can see that they gave guidance for 2022, and they said they have net revenue expecting to be between 1.9 to 2.1 billion dollars, and then adjusted operating income to be in the range of 195 million to 215 million. And then they also listed out some new products and stuff they had coming out. They have the Corsair One i300, which is a PC. They have Scuff products. They have Elgato products. They have a new keyboard coming out and several more things. The balance sheet was also something that looked phenomenal here. At the end of 2020, there was 437 million in equity, and then in the end of 2021, there was 568 million, which was a 30% increase. That is a really nice increase there. So that's another great sign. Now, this is where it starts to get interesting because the company put a target of $3.5 billion of revenue for 2026. Okay. And that's quite the jump from where we're at today. So I did a little bit of analysis, ran some numbers, compared it to Logitech and what their numbers would look like, and try to get an idea of if they do hit that 3.5 billion in revenue, what is the profits going to look like? What is the market cap going to look like? And what is the valuation metrics going to look like? So this, the way I looked at it was, okay, they said $2 billion of revenue is expected for this year, 3.5 for 2026. So I just kind of put it at an average rate that would be 15% growth each year. So As you can see here, we start at 2 billion, 2.3, 2.6, 3 billion, and then 3.5 billion. Okay. And a price to sales, if you look up the average price to sales for Corsair Gaming, it's a 1.5. It's traded at a 2, I think a little bit above a 2 a couple of years ago, but recently it's been trading right underneath a 1, and then it spends a lot of time around 1.5. So 1.5 is actually really undervalued for a company like this, because traditionally I think that for a company growing at 15% a year revenue wise, I would think the price to sales is more going to be like maybe around a 6 or something like that. But I think it depends on the company as well as how profitable they are. The profitability is a big factor, and I think that's where it makes more sense on the profitability end. So if we look at, so I put a profit margin of 8%. Okay, right now it's a little bit under that for them because of the reasons I stated earlier. But if you look at Logitech's margins, back over the past 5 years, okay, back in 2017 when they were in a similar position, Logitech had a profit margin of 8%, 9%. It went as low as maybe 6 or 7, and then more recently it's gone up to towards 15%. And so I think an 8% profit margin is very conservative, very realistic, and there's an extremely likely chance that Corsair Gaming will maintain an 8, maybe a 7 to 9% bottom line profit margin for the next 5 years. Okay, maybe not this upcoming year, but after that it should average out to about 8%. So that's where I got this net income at, and that's how you can see them doing, starting at about 160 million. Keep in mind I did about a little over 100 million for 2020 last year, 2021, and so 160 million is quite a big jump. But you got to think a lot of that profitability is going to rebound from the supply chain going away and things like that. So we should see 160 million. That number, I could see it being a little bit less. I wouldn't be surprised if it came in around 130 or 140, but I think it'll balance back out and average out to these. It's going to end up at about 280 million in 2026. Okay, so this puts it at if we're thinking in terms of a market cap of $3 billion in a year from now, then that'll be a PE ratio of 19. Price of sales of 1.5. So that's where I got these market cap numbers at, and you can see it goes from 3 billion, 3.5, 4, 4.5, all the way to $5.25 billion in 2026. This is going to be 4 years from now, and I see it being, so that would put it at a $56 share price, and so almost a 3x on your money from where it is now over the next 4 years. So that's the way I see this, and I bought into this company a little bit too early, but I think it's a great company. They own lots of great brands. I think they're in a fantastic space. They own tons of brands that make high-end equipment for gamers, for streamers, for with keyboards, PCs, what else? Microphones. They make all these different things, cameras, lights, all this stuff. So I think they're in a good position, and you always have the option that somebody buys them out, and that's for in the short term it'll push the stock price up, but I think this company has a great opportunity to just stay on its own, and I can easily see it 3xing in value over the next 4 years. I think this $20 mark that it's at now is dramatically undervalued. I think it deserves to be trading more around a $25 share price, if not $30 share price. So I think I'm hoping it'll come back to about $30 a share in about maybe a year from now. But we will see what happens. So that's all for today. Thank you for watching, and I will see you in the next video.